Hey everyone, welcome to Breakout Wednesday for the 20th of November 2024. It's currently 9 p.m. on the West Coast, about midnight on the East Coast. First of all, remember this is never financial advice, not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Here's a chart of the All Ords, okay, floated with new all-time highs. What a great day we had yesterday, right, on Tuesday. And I'm not going to go through all the markets, but obviously, everything's still in uptrend. So quickly, let's just go through some of the trades. Been talking a lot about car, huge move, still in a lot. Haven't trimmed anything yet. I'm just trying to hold on to these big winners because I keep looking at PME and how I sold it too early. The money's made in sitting on your ass, riding winners. Had a loser in AKM, broke out the day after the breakout, got out of it. Okay, quick loss. That's life. Okay, so if you want to be a trader, you're going to have losers, and once you've had enough of them, you stop giving two shits about them. You just part of business. You just move the hell on. RUL talked about last week. Entered today. Okay, on a break of this little pivot. At 3.04. So good start to that. Really good start to that trade. Let's see how it actually plays out. But that is just perfection, right? There's a loose cup, okay, and this big uptrend, bit of a topping pattern, and then loose wild swings. And as I kind of pointed out with the car chart over the last month or so, you would never take this breakout to new fresh highs. It would be just so dumbass because there's all this air here. It's too loose. It's got to tighten up, and that's why these cup and handle forms, right, is that you get these uptrends, you get a short to the medium term top, and then it chops about, okay, as people just try and protect their profits and they sell wildly, and then it gets picked up on big dips, and it's a bit, a bit of fear comes into the market and a lot of uncertainty, and it chops about and chops about and chops about, and there's prone to fake outs, and then it tightens. And the tighten is just, all the sellers are pissed off. Everyone, just smart people accumulating it again. And it just goes sideways and tightens, and then these have big run-ups, usually. Okay, so let's see how she goes. But I'm definitely in RUL. Wagner Group, damn. Nice breakout in Wagner Group. What else was there? SSG, and it is a bit annoying. Came back a bit today. Let's see, I'm still in it. Touch base on that next week. Trim shop, okay, just as it's breaking back down below the low here, so got out of half of that, but still in it from this channel break. And just quickly, I just want to talk quickly. Obviously, I don't need to explain to everyone listening what a cyclical company is, okay, but like commodities, right? Commodity business that is dependent on the price of a commodity. Like Fortescue is a good example, right? Because it's obviously so correlated to the price of iron ore, right? And so, this company could have the best directors and the best management in the entire universe, but if the iron ore price is going down, to the shitter, the share price is going to the shitter as well, right? It's just as simple as that. There's no brilliant management and business, entrepreneurship that's going to make that stock go up when the iron ore price is crashing, all right? And so it's just so dependent on what it's digging up. Whereas, companies like PME and CAR and REA, I get that they're susceptible to general bear markets like we had, after COVID, when tech kind of just went down for 18 months to 2 years. But everything pretty much went down except for coal stocks during that time during the bear market. So, but my point is that REA is in control of its own destiny, right? If you look at what the new CEO, I forget her name right now, in Zero did. I was just reading on the Fin Review the other week. They brought her in, and she's just a complete freaking gun, right? Like she's just so good, and obviously, they're in control of their own destiny. They really are. Like, they've got this business. It's up to how good the management is, how good the CEO is, how good that directorship team is, and they go out there and they implement strategy, and it's pure business, right? And the purest sense of business, right? Whereas the commodities is not. And so I just, obviously this is very simple shit. Everyone probably figured this out a long time ago, as kind of I did, but it's just worth pointing out that you know, these tend to be the stock working best right now. The really, 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 really good businesses. And I am trying to stay clear, as I've been crapping on for years, and no one really ever listens. But the success rate in the penny dreadfuls is out the yin yang awful, right? For most traders. And in 20 something years of doing this shit, I've never really met anyone who has made crazy money trading specs. I've met some people that have done pretty good, and I've done good from time to time, but my consistency with the specs is good. Like sometimes I'll have months where I do awesome, and then I have months where I do shit. Whereas when I just completely concentrate, this is why most of my trading happens in these big end of town, in the real companies that have real cash flow, and real businesses, and they're in control of their destiny. Okay, I've talked too much about that, but I do think that most people I know that have made good money and continue to make good money successfully concentrate on this sort of shit. Okay, the real companies, not the penny dreadfuls. Okay, obviously that's a bit different to the commodity shit I was just talking about. But anyway, let's move on. Some stuff I'm looking at. These all come up in data scans. CDA. This thing is just tightening and tightening. Let's just clear all of it up completely. Shit, one sec, guys. Get in my phone. All right, so let's just clear up roll, and just have a look at its. Shit, what am I doing? I meant to clear up CDA. Sorry. Let's just clear up CDA. All right, so let's just go have a look at these Bollinger Bands. Look how man, they're so squeezed. All right, so this thing has just been tightening and tightening, and it might break down, right? But I want to be in these suckers when they're breaking up, because they're high probability. I can get my stop really tight, and if I lose a small amount. But if I win and I sit with it and I'm patient, then I'm going to win big. Okay, and that's what it's all about, right? So CDA, I'm totally watching. SDR. It's still in the Davis box, it broke down a little bit, but it's still sitting in it, and it can just chop around all at once in this box, and so that's still on the watch. What else was there? That's mainly it on the ASX, to be honest. So I'm watching this second. CVNA. Now I traded this guy back here for those on Breakout Wednesday that were listening. I think had a good trade. All right, traded up to like 50 something, I forget. Didn't trade that one, just traded this one. And then, now it's at $249. I mean, I nearly fell over yesterday when I was looking at that. This is just crazy, Holy shit, right? This went to a low of $3.80, $3 something, during the bear market, and now it's at 249. Oh, wow. Holy shit, that's just mind-boggling, isn't it? The sort of moves and just the money. I mean, imagine if you put 100G down here at $3. I mean, I know that's just pointless saying that sort of crap, isn't it? But imagine. And so CVNA is just setting up there. That's not a perfect setup, right? Like, but this thing, I don't know, who knows how high this thing could go. I mean, it's got an all-time high of 377 or whatever from the COVID bull market. I mean, maybe it can double, maybe go up to $1,000. I mean, who the hell knows, right? So that is just fascinating stock to keep on a watch list. Chef, right? And Chef's just like, this came up in a Dava scan, just obviously Chef's warehouse. I just want to have a look at this on a weekly, okay? Here's this all-time high back here, right, in 2019. It's kind of a little chart that's reminiscent of SSG on the ASX, isn't it? It's just been, had this massive collapse, obviously, during COVID, like everything did. Massive rally, and then back up to this all-time high. It's taken up that all-time high back here in July of this year, and then it's been forming a bit of a handle, okay? And you could easily, call that an ascendant triangle, whatever the hell you wanted to do, but it's all irrelevant, right? Don't get worked up too much and all this shit. It's tightening, and there's massive resistance, and it's just poked its head above the all-time high. It's kind of all I need to know. And that is, that has got blue sky, and then this would potentially just be a launch pad where it can just fling out of that and go nuts. So, Chef I'm watching, and look, good old Duolingo, okay, but frustrating trade that I had, but this has come up in another Davis box, and it's not ready for me yet, but But these leaders, like, it just sometimes you do get chopped out right before earnings, which is what happened with me. But now it's basing here in this box, and I just don't give a shit. I would totally re-enter that sucker if this bases and tightens for long enough. So just because it's a leader, it's got this great product. I mean, every time I hang out with my cousins and stuff, and my nieces and my nephews and all those, everyone who's younger than me, they've all got their bloody Duolingo, and they're talking about their Duolingo. It's so widely used, especially in the 14 to like 40, the age groups, they're so widely used in the younger generations, and it's just a lead in stock that, I want to be a part of, and it gives good signals, a bit like I do with every single Shopify signal that I ever get, because it's just a nutty good company. That's it, guys, this week. Not watching too many, but there's some good shit out there, and it's a good market for those who love to trade breakouts. Take care, bye.